We've had a strong rally for the past 3 days, and today's gapping up again. I have one obvious, I don't know if it's obvious, but look at yesterday, first bar low of the day, day before, first bar low of the day. Here, second bar low of the day. So we've had trend from the open bull trends for 3 days. What happens when the market starts to do something repeatedly? More and more institutions switch their trading, betting that the pattern will continue. At some point, a critical mass is reached, and too many institutions are using algorithms that are doing the same thing. Right now, everybody's looking for an early low of the day. And this is 3 days in a row. It's unlikely that we're going to get that 4 days in a row. And therefore, if we do get an early low of the day, you have to be suspicious that it's not going to be the low of the day. Bulls buying, betting that it's going to be another trend from the open bull trend. You always hear me say that the first part of the day has a 20% chance of being the high of the day or low of the day. We've had 3 days in a row, or 2 days in a row, where it was the low of the day. That's far greater than 20%, and then today would be a third day. Sometimes the market gets it starts getting trading range opens every day, so the first bar is never the high or low of the day. And then other times it gets like it has been the past few days, the first bar always is the high or low of the day. This is the third day now where the bulls are trying to do it. The fourth day, if you count that second bar being the low of the day a few days ago. You got to bet against it. So if today is not going to be a trend from the open bull trend, what will it be? Well, several possibilities. One is it could be a trend from the open bear trend. Just sell off. From the open, which it might do. Yesterday we had a trading range late in a bull trend, so probable final flag. We're getting a breakout above a parabolic wedge top. In general, 50% chance a breakout above a wedge will lead to a swing up, 50% chance it'll fail. I think it's higher than a 50% chance that it will fail and that we'll get back into this trading range either today or tomorrow, simply because this is so extreme. So one possibility is that we get a trend from the open bear trend. More likely, we're going to get confusion. Yesterday, the entire day was a trading range day. We had a couple bull bars here, a couple bull bars here, but everything else was a trading range. The market became more sideways. That increases the chances that today will be more sideways as well. If one closes on its low, it's a possible high of the day and a reasonable swing short. You sell below 1, stop above 1. Some traders want higher probability, and they'll wait to see if we get a second consecutive bear day. Remember 3 days ago, we had this, but there was a reason why this reversed. I said at the time there would be buyers below because we were in a tight trading range and it was selling near the bottom. I'm getting some beeping from some electronic device in my office, and I have no idea what it is. But anyway, back to this. This is not like 3 days ago. We're not in the middle of a trading range. We're above a trading range, and that increases the chances that this will be an early high of the day. So this is a higher probability short. A lot of traders wait for a second consecutive bear bar before shorting, but the context is good for the bears. Very climactic rally, way overdone. And a trading range yesterday, so potential final flag. That tail on the bottom of the bar will discourage a lot of traders from selling on a stop below 1. But right now, I think we're always in short, even with that 1 bar. Bulls want an opening reversal up from support. They don't mind an early sell-off. as long as it doesn't last more than 2 or 3 bars, and it immediately reverses up. Bar 1 is big, so the risk is big for the bears selling below. It has the tail below, and therefore the probability for the bears is not as high as the bears want. So this is not a strong trade. A lot of times, if the first bar is the high of the day, you go sideways and you pull back up near the top of the first bar and then sell off from a slight lower high double top. Right now, I'd say 25% chance we've seen the high of the day. If bar 2 is also a bear bar, especially a big bear bar, then probably 30 or 40% chance that we've seen the high of the day. And by the way, I do not, if you're wondering if that beeping is a smoke detector, it sounds like a smoke detector. It's not. It's over, the only electronic device that I have over there is my router. And it's on my desk to the left of me. So that beeping, I believe, is coming from my router. I'll have to call the internet company sometime today to find out if it's a sign that the router might be dying. So the bears, it's a short, stop above 1, but we may get a bounce up before we go down. I'm going to open up my examples folder or file. Can the bulls buy above 2? They would need a pretty dramatic bull bar to buy above 2. So unlikely. Well, I'm sorry about that beeping noise. But as I said, it must be my modem. It's a combined modem and router. It's at least a couple of years old. All right, so this is a sell to close open, and the bulls are hoping it's an opening reversal up, but I think those bear bars are too big, so I think we're losing short, and therefore, even if we rally back up here, chances are we'll come back down here. One bear bar and then low of the day. A couple of strong bear bars, but it was after a strong initial rally. A couple of big bear bars became the low of the day. Big gap up, sideways, we might do this. When you get strong bars on the open after a gap up, it increases the chances of a bear trend day. All right, so the bulls are trying to get their opening reversal up. I think we're always in short, and I would not buy above 3. I think there probably are sellers up there. Can you buy above 3, betting on an opening reversal in the early low of the day? You can, all right, but I think 1, 2 are strong enough so that the best the bulls will probably get here is a trading range. This is similar to today. 2 big bear bars, got a second leg down, which is likely today. The 2 big bear bars, even with the opening reversal up, it's enough early selling to make a big bull trend day unlikely. And usually the result is either a trading range day, possibly a bear day, but we're getting such a big reversal now in the open that I think a bear day is not likely, so probably a trading range day. Just scrolling through to see other days that have big bear bars right on the open. Three bear bars. Got a swing down. Right around a measured, right around 50% pullback. Bulls would need at least a second strong bull bar to flip this back to always in long. But it's confusing. We have a gap up, a big sell-off, big reversal, right? So that increases the chances that today will be a trading range day. Multiple reversals, big bars, increases the chances that today will be a trading range day. Now, one other thing you got to see, we failed on our breakout above yesterday's high, and that means we're probably going to try to get down to yesterday's low. Yesterday is not a particularly big day. Its low is therefore not particularly far, especially when you have bars as big as this, and therefore today has an increased chance of being an outside down day, where it trades above yesterday's high and then trades below yesterday's low. Usually if you get an outside down day, you do not end up with a huge bear trend day. We had a big outside down day here on the daily chart, and the next day totally reversed up. You can see there was also a pretty big tail on the bottom of the bar, which means that traders bought into the end of the day. Always in short, sellers above 2, they're certainly scalping, but they can also be swing trading. For the bears, a second failed breakout above yesterday's high. 1 went above yesterday's high, the breakout failed. 3 is again above yesterday's high, and the breakout is failing again. So it's still on a short stop above 1. This is a second entry short, but with 3 as strong as it is, I think the bears still need the stop above 1 if they take the short. If it triggers by going below 4, which it probably will, if the bears are going to get down to yesterday's low, it probably will not get back above the 4 high. Failed breakout yesterday's high, second entry. It triggered, it rallied, but it never got above this lower high. So that might be the same kind of thing today. The second entry sell did not trigger. We did not fall below the 4 low. The bulls still hope this is the low of the day, that it's a brief sell-off down to support the moving average, and then a reversal up and low of the day. It's possible, right? There are bulls who bought above 3. They're certainly disappointed by 4, but right now it's more likely that we've seen the high of the day. I would say right now, 30% chance we've seen the high of the day, 20% chance we've seen the low of the day. And upside down is definitely a possibility for today. Big bars, so enough momentum to get here. And context is good. Yesterday, a small trading range day, and a very overbought market, and we're selling off from a new high. Ask yourself, do you really want to buy here? Multiple reversals, gap up, then down, then up, then down, then up. So a lot of trading range price action. And this is buying at a stop fairly high up in the range. Possible low of the day. As I said, the bulls are hoping for an opening reversal up, but a bad entry bar 4. So I suspect more of a trading range open, and the bears will try to get some kind of a double top or second entry sell for the failed breakout above yesterday's high. I sold above 3 for a scalp. I thought the odds were high there'd be sellers up there, but because 3 was so big, I thought that it would not go straight down. Bears trying to get a second entry short for the failed breakout above yesterday's high. If they get a decent sell signal bar, it would be a reasonable swing short. What about a scalp short? This is not good environment. This is not a good environment for stop entries for scalps. Reversing every bar. It would have been better for the bears if 5 traded below 4. Because it did not, it makes a trading range open more likely than a bear trend. So it looks like we may go sideways for an hour before the market decides on the direction of the breakout. I still think always in short. For the bears, a lower high double top swing short, but they need 6 to close on its low, otherwise the swing bears will wait. Because 5 was unable to trigger the short below 4, I think that lowers the probability for the bears selling below 6. Possible high of the day. I'm not opposed to doing it, but I think this is too neutral. It started out nicely bearish, but the bears could not trigger a short below 4. The bears should have been able to do that. 3 bull bars, 3, 5, and 7, and therefore a wedge lower high. Still a swing short below 1 and a swing short below 6, but pretty neutral. Every bar so far is reversing. We have a gap up, we have 2 bear bars, and then through here, every bar is opposite. Up, down, up, down, up, down. Bulls trying to get a breakout above the wedge lower high. And they want to break above the high of the day. If this bar is big and it closes on its high, whether or not we get above 1, we're probably back to always in long. A bull breakout of a wedge top or a wedge bear flag, a bear trend 1, 2, and then a pullback, a bear flag up to 7. Now we're getting a bull breakout above. If this becomes a bull trend day, the odds are against it being a big bull trend day. Too many bear bars. It looks like a smaller version of this. Rally, deep sell-off. Gap up, rally, deep sell-off. Wedge rally, wedge rally. So I still think always in short, but I don't think we're going to go very far up or down. Let me just check where the double top takes us. So here's a double top. If we break below the low, takes us near yesterday's low. We still could get outside down. Failed breakout above a wedge top. So that's a double top and a wedge lower high, but not a good sell signal bar. Still more bearish than bullish. I would not buy the 8 low despite the 2 bull bars, because the bulls had their chance on bar 8. That was their breakout above the wedge top, and it reversed down. This is similar to over here, where we had a bull breakout, a bear breakout, a bull breakout. Here we have a bull breakout, a bear breakout. Limit order market. I am currently flat. I'm looking for a better indication of direction. It's slightly more bearish than bullish, but not as bearish as I would like it to be. Still always in short. Still slightly more bearish than bullish, but not very bearish yet. The bears still have a chance at an outside down day. 5 ticks below 11, possible 5 tick trap, but okay, swing short. What do I think will happen? Well, probably more sideways, but this is the first, I think, first decent sell stop entry today. 6 ticks down, so you have some bears scalping from one point, and then you have the bulls who saw 5 as a buy signal bar, and some of them put their stop below 5, so they're buying more, preventing it from going below 5. Important bar, if it closes on its low, especially if it closes below 5 in the moving average, that would increase the chances that we've begun a swing. And if it does not, then it increases the chances that we're going to stay sideways more. Not a great bar for the bears. It's a good bar, but it could have been great. So the bulls still can get a double bottom with 5, slightly more bearish than bullish. Everyone wants a trend, but that's not likely what we're going to get today. Today's probably going to remain a trading range day. We'll get some kind of a breakout at some point. However, the odds of the day being a big trend day up or down right now, the odds are small. And the longer we hold up here, the less likely it is that we'll form an outside down day. We got a trading range. We have double bottom and a higher low, and we have lower highs, so you can call it a triangle. Breakout mode, 50% chance that the initial breakout up or down will reverse. Like yesterday, we had a bull breakout, a bear breakout, bull breakout, bear breakout. So the first 4 breakouts failed, and 50% chance when there's a successful breakout, it'll be up, 50% chance it'll be down. It's still slightly more bearish than bullish, I think. Bar 1 and 2, that is the dominant move of the day. And the bulls tried to reverse up, but the reversal up was not as powerful as that reversal down. Plus the context is good for the bears, the possible final flag here. If we do go up, we might get one more rally to a wedge top, 3rd push up. I think we're always in long right now. We have a triangle at the moving average, a double bottom higher low, double bottom 4, 12, slightly higher low 16. Okay, buy signal bar. So I think we're probably always in long. The bears have had many chances, and the bulls are getting a decent setup. Can they get a big bull trend bar closing as high? Can they get 2, 3, 4 consecutive bull bars? There's buying the market. Traders who want higher probability will wait for one more bull bar, but this bar is big enough and the context is good enough to make this a reasonable candidate for a swing. I still don't think this is going to be a big bull trend day. I still think that if we do get above the high of the day, it's not going to be a big bull trend. Probably 90 to 95% of days, certainly 90% of days, have at least one 4-point swing from a stop entry. And this is a good candidate. Decent bull bar, not great. I think we're always in long. The bulls would like to get a follow-through bar, but we're in a trading range, so you have to assume that it's not going to quickly become a bull trend. And even if this is the start of a bull trend, it's probably not going to be a strong bull trend. So probably the best the bulls will get is a bull leg in a trading range. For the bears, they want another lower high in the triangle. But it's a big enough bar, good enough context. I think the odds favor the bulls right now. You can draw the triangle like that, or you can draw it like this. This is the follow-through bar. At a minimum, the bulls want no bear body. So a perfect doji like 13 would increase the chances that we're going higher. The one thing they don't want is a bear bar closing on its low. They don't want 19 to close on its low. If it does, the bulls will get out below. Some bulls don't like to buy the market as this bar is forming. They prefer to wait to see consecutive bull bars. So bull breakout 18, and they want to follow through 19. Bears, they're selling. They're betting that the trading range will continue. So they sell, stop above 8. They're not risking much. And they say, okay, I know it's probably going up, but I'm not risking much, and therefore it's an okay short. Take a low probability short. So they sell, big reward, low risk. The trader's equation makes sense. So good risk reward for the bears. Low risk, stop above 8, big reward, measured move down. So they'll take the low probability trade. You can see how we're waiting until the close of the bar to find out how bullish or bearish the follow-through bar is going to be. You have to assume it's not going to be a big bull trend bar, right? You have to assume this is not the start of a big bull trend. That is, if it is a bull trend, it's probably going to be weak, like this. Disappointing follow through after every bull bar. The bulls got a bull body, which is a minimum accomplishment instead of 18 closing on its high, there's a tail, and instead of 19 being a bull trend bar, it only has a one-tick bull body, and the 19 low fell 4 ticks below the 18 close. Strong bull trend, you don't want to see a lot of overlap. You want to see this, very little overlap, this low and that high. This close, that low, right? That is a strong bull trend. Same with here. Very little overlap between the high of this bar, the close of this bar, and these lows, likely to go higher. And today, we have a lot of overlap with the 19 bar and the 18 bar. Always in long, but probably not going to be a huge bull trend. Gap. You can see as soon as, remember I said that a lot of bulls don't want to buy the first breakout bar, they want to buy the follow-through bar. And they want to buy if it has a bull close. Bar 19, bull close, right? And that was a trigger for a lot of bulls to buy. So as soon as 19 closed, a lot of bulls hit buy the market. And look at the open of bar 20. It's above the 19 close. That tells you that there were a lot of bulls waiting to see a second bull bar before buying. And as soon as they saw 19 have a bull body, they hit buy the market. And that's why we had that gap up on 20. What happens if we break above the high of the day? Nothing special. Right? The odds are against a big bull trend day. For the bears, they're hoping this is a large low two or two-legged rally. Leg one, pull back, leg two, and a top. We're 13 ticks above bar 17. The market had to go up, not 13 ticks, I'm sorry. We're 11 ticks above bar 17. It had to go up 10 ticks for bulls to take 2 points profit. And when the market's in a weak rally like this, and possibly still in a trading range, I like to take partial profits at 2 points, because sometimes it's just a bull leg in a trading range and it does not go any higher. The trading range continues. Will the bears sell on a stop below 21 for a big low two with bar 8? Second leg trap, 2 legs up in a trading range, 1 pull back 2. With the 4 bull bars, I think a lot of the bears would prefer to get a second entry stop, a micro double top, so not a lot of bears will sell below 21. Now what do you do up here? 16 ticks. Once it's 16 ticks. Okay, it's 17 ticks. Okay. What do you do up here? There's no sign of a top. However, the rally is not, it's becoming stronger, but it's not all that strong. I'm trying to go flat here. And it's hitting my limit order. You can see that it's going 17 ticks, 17 ticks, 17 ticks. Usually has to go 18 ticks to fill traders. And the reason why I'm going to go flat here is I suspect that we're not going to go a lot higher. Strong enough rally, traders will buy the first pullback. What about the bears selling the one high? This is too many bars up. I'm not going to do that. Buy the close, but a big bar, 5 or 6 bars into the buy the close. Usually the market will start forming a pullback. I'm back to flat. But do I think it's a 2-leg trap in a trading range day? No, because we went far enough above 1 to make me think that Instead of a trading range day, it'll be some kind of a bull trend day, but a weak bull trend day. There are two types of weak bull trend days. One is a broad bull channel, keeps making new highs and then having deep pullbacks. And the other is a trending trading range day, where you have a lower range, a brief breakout, 3, 4, or 5 bars, and then you start to form an upper range. I think that is what will probably happen here. What about the possibility that this just keeps going up and up and up? I think that's not likely. A lot of early trading range yesterday, and the rally lacks consecutive big bull bars, so it lacks energy. The bulls who did not exit at 4 points, a lot of them are exiting on the reversal down. But for the bears, this is important. Look at the 24 low, and then look to the left. We're right at the 1 high. The bears needed to fall 1 tick lower. If they do, it changes the character of the day, because then we know limit order bears will have made money. There are also bears who sold the 8 high, and they sold more higher. If this reversal down falls below the 8 high, that would make it even more neutral, more likely a trading range. The bulls are trying to keep the gaps open above 1, above 8, and then they want a measured move up. Even if we do get a measured move up, I still think the odds are the day will close around its middle. So let's say we get a measured move up based upon the height of the low of the day to the open of the day, which is a common occurrence in a trading range day. If we get up here, I think there'll be sellers here, and the day will try to get back down to the open later in the day, because that's what typically happens. Is the day going to be a big bull trend day? No. Is it going to be a big bear trend day? No. It's probably going to have a lot of trading range trading like yesterday. Look at all the black bars here and here. Usually you do not get a big bull trend when you have that many black bars. If today's going to be a trading range day, or a lot of trading range trading, there are two things it can do. Trending trading range day, trading range, and then upper range, and we close up here, and the day will be another bull day on the daily chart. Or trading range, we get up to a measured move, and then later in the day, drift back down to the open, and then the day closes around the middle, and the day ends up as a perfect doji bar on the daily chart. If we get up here, traders will look for some kind of a reversal, and they'll sell for a swing back down to the open later in the day, 11 o'clock, 12 o'clock, 12:30. Still always in long, and still a breakout test of the 1 high. So that is a bull flag. However, a buy climax 22, doji 23, bear bars here. A lot of bulls are hesitant to buy with a stop above 25. They'd rather buy a pullback to below the 8 high. So a pullback down here, maybe buy there. Do I think the limit order bears who sold the 1 high will make money? Yes, I think we're going to pull back below the 1 high. Whether or not we go a little bit higher first. Second failed breakout above the high of the day. This is a higher probability short, but I would not be entering with stops on the shorts yet. A lot of times you get 2 legs up, 1 pullback 2, and then 2 legs down, 1 pullback 2. At the end of the day, you look at the chart and you say, hey, wait a minute. The whole day was filled with 2 legs up and 2 legs down, and that's common with trading ranges. It's okay to sell here, especially if you can use a wide stop. But with the strength of this rally, I did not sell with a stop there. we should pull back below the 8 high. Limit order bears probably will make money. They made money selling above 1. They probably will make money selling above 8. They sell at 8 high, 1 point higher, 2 points higher. And that would increase the chances that we've started our trading range. 3 consecutive bear bars for the bears who sold below 23 or 26. Do they get out? I don't know. I think if you took that sell, you had to expect that it would not go straight down. I think we're going to fall below the 8 high at a minimum. But I also think that just like this will end up as a bull leg in a trading range, this is a bear leg in a trading range or in a bull channel. And therefore, there are probably buyers somewhere below. Right now, I would say 70% chance we're not going to get below the 12 low. We broke above the 18 bar range. 90% chance we will not fall below bar 2. Maybe 90% chance we will not fall below bar 12 either. Well, do you buy? We have a gap above 8. I think you're only buying if your stop is below 6. I think we'll probably get a little bit more sideways to down. For the bears, is it low enough to sell? We know they'll sell above 23 because they made money selling above 1. We have 3 bear bars here. Some bears might sell 28 high and sell more higher. I do not think it's a great sell. I think more likely we'll go sideways here. Maybe dip below the 8 low. Remember I said I thought the day would be a trending trading range day, which means a lower range, a breakout, and an upper range. Trading range means bulls will buy below things, below 24, below 28, below the 8 high, and bears will sell above things, above 23. Down to the target, we fell 1 tick below the 8 high. We don't know how far down the pullback will go, but we're in the buy zone. The 8 high, the moving average, 50% pullback of this rally. I too buy, but it looks like we're in a tight range, and I think it's better to be looking to buy with limit orders below bars and selling with stop orders above bars. You can see 31 fell exactly 5 ticks below 28 high. That tells me that a lot of the bears sold the 28 high and scalped out with 1 point. Bulls buying above 32 here. I still think they need to stop below 12. For the bulls, it's a high 2 bull flag, a breakout 33, and a pullback 37. And that's what it probably is. For the bears, it's a second leg trap, 1 pullback 2, a large 2-legged move, and what they hope is a big trading range. The market's deciding between 2 things. Both are trading ranges. First, is it going to be a trending trading range day with a lower range and an upper range, in which case we're not going to get much below here before trying to go higher. Second, instead of trending trading ranges, will it simply be a big trading range day, and will we come all the way back down here again? Right now, the odds favor higher prices. This is a strong enough rally, but we could easily come all the way down here, and it could end up as a trending trading range day. As a big trading range day instead of a trending trading range day. Bears trying to get down below 12. 90% chance they will not succeed. If we start to get bear bars, then it becomes 80%, 70%, 60%, 50%. They bought below 24, they bought below 28, they're buying below 31. But they're probably mostly scalping. The bulls failed breakout. And a high 2 buy, leg 1, pullback leg 2. But tight trading range, I think it's better to be buying with limit orders and selling with limit orders than to be entering with stops. Right now, probably the most important price of the day. Whenever you have these days that are trading range days, You get a lot of trading range price action. You got three important prices. One is the most important price, and that's the open of the day. The day is probably going to close around the open. Whether it goes down or up, it's probably going to close around the open. Can it become a big bear trend that we have a wedge, 1, 2, 3? It's possible, but the bears need to undo this rally. So days that are going to be trading range days or days that aren't trading range days usually close around the open. Sometimes they'll close around the low, sometimes they'll close around the high. But this is probably going to be one of those days where even if we go down here or up here, we'll probably end up closing around the open. I brought stop entry bulls, 2 legs down. I would rather buy with limit orders when the range is tight like this. I think we're still always in long. Fairly tight pair channel, so probably not going to go very far up before we start to go sideways again. The bears are hoping it's a channel all the way down, and therefore they're selling around a 50% pullback from this last leg down. I think it's a little bit tricky to sell. I'm buying lows. I bought the 38 low and I scalped out. I'm hesitant to sell unless I'm selling above some obvious prior high, and 39 is not a particularly good prior high. So right now I'm waiting to buy a pullback maybe to around the 42 low and sell possibly above 36. We have 5 bars at the same price, so we have a ledge here. And whenever you have a ledge, it's a magnet. The market will usually go above it. 80% chance we're going above that high within the next few days. It looks like we'll probably get there today. If you do break above a ledge, probably 70% chance within 5 or 10 bars you get a dip back below the top of the ledge. So we should go above 36 high probably today. And if we go up here, we should dip back below the 36 high. Ledge top, even with a 15-point sell-off, we still went above the ledge top the next day. Ledge bottom, we went below it, which was likely, and usually it pulls back above it. Here it reversed back above it. This is kind of like today. Ledge top, we went above it, we pulled back below. Ledge bottom, we went below, and we pulled back above. I usually don't pay much attention to a ledge unless it has 4 or 5 bars. Lower high, about 7-bar bull microchannel, no bear bars, and 8 bars plus a magnet above. So low probability sell, probably buyers below. But do we get above the ledge or do we form another top? A lot of these ledges have tests that are far apart. Here, it's spread over about 10 bars. Excuse me. By the way, I called my internet provider, and they said that chirp is the modem. There's a battery backup in the modem, and when the battery gets old, it chirps. So I have to get that replaced today. Because no bear bars and 10 bars, I did not sell this, but I am looking to sell somewhere up here. I'll probably wait until we go sideways for a few bars first. It's not a good sell. Can you buy here? I would not. It's already achieved its goal. It got above the top of the ledge. I think we're going to close the day around the open of the day. It's 11 o'clock, or almost 11 o'clock. And if a day is mostly a trading range day, after 10 o'clock, it usually stays mostly a trading range day. The bulls would like to get a second leg up, but this is already a second leg up, one pullback two. I still think it's a trading range day. It's a trending trading range day, trading range, and I think we'll close around the open. I mentioned earlier that we might go for a measured move up from the low to the open, but I think that's not likely now because we just don't have much energy. Buyers below 52, but probably not much more up. Possibly we'll get 3 pushes, 1, 2, 3. Maybe the measured move will be from the 12 low instead of the low of the day. Open of the day is the magnet, so maybe that'll be the measured move. Sellers somewhere above the high of the day, maybe up to here, and then we should come back and test the open of the day sometime before the end of the day. Second entry short, like below 26. Magnet, open of the day, but fairly strong rally, probably a minor reversal, and we'll probably do this again. And then the bulls will see a head and shoulders bottom bull flag, so left shoulder, head, right shoulder. The bears are hoping for a double top. And the high of the day. I still think we'll probably go a little bit higher, but I also think that we're going to end up testing the open. We're very close to it right now, but I think we'll end up testing the open in the final half hour or so, and that will probably close around the open. I2 bull flag, similar to 32, top of a upper trading range. Probably if we do go higher, this will be the final bull flag, and we'll get a reversal down back to the open at some point. Not good stop order trading, in general. Top of a trading range, buying with stops is a low probability bet. The bears are getting some selling pressure. The bears who sell with a limit order at the 52 high will probably make money. Again, I think we're going down to the open before the end of the day, and that will close around the open. We might get one more breakout first. We have a reasonable measured move target a little bit above the high, and then we have the top of the channel. I did not take the 57 buy. I debated it. I like to take it if I think the market's trending pretty well, and I just was not convinced that it was, even though we had that magnet up there. In hindsight, I should have taken it. Where do the limit order bears sell? Well, some will sell right at the 52 high. I would not. I think if you're looking to sell with limit orders, it's better to sell at least a point above. We've had an exceptional week, and the bulls are trying to make a dramatic finish. Here's the weekly chart. Look at the size of this bar. and then look to the left to find a bar just as big. You have to go back here, maybe 50 bars. This bar is bigger than this bar. When you get the biggest bar occurring 20 or more bars into a trend, it's more likely an exhaustive bar than it is a breakout into an even stronger trend. By an exhaustion bar, it simply means the gap between this close and that high. The gap between this close and that high probably will close within the next couple of weeks. That would not take much of a pullback, so it's not saying all that much. But biggest bull bar late in a bull trend, usually more likely an exhaustion move than the start of a stronger leg up. Whenever you get a breakout, you look at it and say, I wasn't expecting it to be that big. The odds are you'll get at least a small second leg up. At resistance, the top of the channel, not a good bull flag, 61, but a lot of bull bars here, not much in terms of bear bars. So not a particularly good sell. Parabolic wedge, 1, 2, 3. Bigger wedge, 1, 2, 3. We got to within 2 ticks of a measure move up from the low to the open. 2 ticks is always a problem for me. Usually the market has to get at least to within 1 tick before it reverses. 62, not a very good looking sell signal bar. Limit order bears are sold 61 high and 1 point higher, or simply 1 point higher, made money. Stop order bears, 63, multiple of 3, and therefore it's a 15-minute reversal. 15-minute chart, top of a channel, a wedge on the day, 1, 2, 3, but fairly tight bull channel, not a strong sell setup. Selling below the 63 low, which is the bottom of the 15-minute bar. Can you buy here? I would not. We're at resistance, top of a channel, and measure move target. We may go a little bit higher, but I think not much higher before we pull back again. Bears made money selling above 61, and therefore they'll sell above 62 and maybe above 64. Second entry sell below 65, but not high probability, not a good sell signal bar, 65, and fairly tight channel. We know there probably are sellers above. We also know the open of the day has a magnet. It is a magnet, so we should get back down to the open of the day. We have about an hour to get there. As far as buying above 66 for a high 2, I would not. I think either this will be the high of the day or the high of the day will not be much higher and traders will start selling above bars. I'm not opposed to being short right now, but you probably have to risk 2 or 3 points above 62. What about being long here? Well, we have not traded below a decent bear bar yet. If it does trade below 63, I would get out of longs. So swing bulls could still be swing trading, still holding. Surprisingly good bar for the bulls. 59.60 likely to have at least a small second leg up. This is, I think, a surprisingly big second leg up. So we may still go higher. Do I think we will? No, I think we will not. Bulls want a measuring gap above 52. We're at the measured move based upon the low to the open. $60-minute chart, we're beyond the measured move based upon the 9-day range. We hesitated, but then we rallied further. No other obvious resistance near the top of this channel. Daily chart, top of a channel, but 4 strong bull bars. So no sign of hesitation. Weekly chart, it's a Friday, but there is no weekly support and resistance that are nearby, so that's not important. Probably not much downside for the bears who are selling here. It's also tricky, I think, to sell with limit orders in a bull trend in the final hour because the market can just keep going up a few points and then the day ends and you end up with a losing trade. As for buying up here, I would not. The buy was 67 and I did not take it. Are we still going to get down to the open? I don't know. You know, the bears need a sell signal bar 69, and we're adding bars onto this trend, reducing the chances that we're going to go down very far. Normally, if it's going to get down to the open, the rally does not look like this. Normally, here between 42 and 62, the biggest bear bar is only 2 ticks. If this is a bull leg and a trailing range day, it normally has more bear bars. So right now, I think we probably will not get down to the open. not a good looking. For the bears, it's the second leg up, but this might be strong enough, and this might be strong enough for the bulls to get one more leg up. 69, not a good looking buy signal bar, but I don't know if my mic was on. For the bears, we might get a third leg up. 1, pull back 2, pull back 3. This is fairly strong, and this is fairly strong. For the bulls, it's a high 1 buy, but I don't know that it's strong enough to be buying above a bear bar. I think there probably will be sellers above 69, and then we'll start to pull back. At this point, I think we will not get to the open of the day. We're only 1 tick above the measured move. So that measured move is still influencing the market. If we were to turn down right here without going higher, then I would think about the market possibly getting down to the open, but the bears would need a pretty strong reversal because they're running out of time. I sold the 62 high, and I did not like 70, so I got off break even. This is buy the close, but in a way it's similar to this kind of buy the close where you have small bars. Also a wedge, 1, 2, 3. I did not buy this, even though it was profitable, for those who did buy it. Buy the close rallies, end of the day. If I were long, I would get out 1 tick below any bull bar. Excuse me, 1 tick below any bear bar, or 4 ticks below a bull bar. I think the traders who are buying the 74 close, 73 close, probably will not make money. Let me check a measured move based upon the height of that sell climax. If the market goes beyond one resistance level, you always look at the next, which is the measured move based upon the sell climax. We're within a tick of it. Now, can you sell? Let's say 75 is a bear bar closing on its low. What about selling below its low? Thinking that all the bulls are going to exit. Well, you are right. The bulls will exit, so they'll be selling. But I'm not sure that it will go down far enough for the bears to make a profit. You always get the issue of risk, reward, and probability. So you sell below 75, let's say it's a bear bar. You're risking 6 ticks, 7 ticks, and you're trying to make 4 ticks. You have to be 80% certain that you're going to be right. And it's not an 80% certain trade. I'm trapped out. I cannot buy up here. It's too late in a buy the close type rally, so too likely to reverse. And I don't want to be selling with limit orders this late in the day. Really unusual, just getting vacuumed up in a parabolic buy climax. Too much risk for me, so I'm trapped out. Next measured move is from the too low to this high. And sometimes when the day becomes a bull trend day like this, it gets vacuumed up to even the furthest target. You think at the time there's no chance of getting there. But when the day becomes increasingly strong like this, it very often goes all the way to the most distant target. So this gap might end up as a measuring gap. This is from the limit order bears getting squeezed out. The bears are sold either the 69 high, and who did not get out, I get out. And the bears are sold the 74 high. They're getting squeezed out right now. Should be sellers up here, but what do? It's really easy just to get trapped. If it goes up 1 or 2 more bars, you end up with a loss. I would get out of longs right here. This is the final target that I see for the bulls. So I would go flat right here if I were long, which I'm not. And if it were earlier in the day, I might short, but it's not. So, excuse me, so I have to wait for Monday. Well, it's such a tempting short, but I can't do it. Not enough selling that tail, 76 in the measured mover, not enough. So I just have to let it go. Bulls, do they get out one tick below 77? If I were trading it always in, I probably would get, well, at the end of the day, I don't know, I certainly would get out 4 ticks below 77. I don't know about 1 tick. If 78 has a bare body, I would get out 1 tick below. You see how quickly that reversed in the final second, bar 78. It was a bull bar, and in 1 second, it went from a bull bar to a bear bar in the final second of the bar. A lot of the computers took profits in the final second of the day. I think traders should do nothing here. You cannot buy, and I would not sell. It's becoming, or it has become, a small pullback bull trend, and that's a difficult day to make money with stop orders, selling with stops. What about the bears who sell below 78? I think they will make money. So why did I not sell below 78? Because when I say I think they will make money, that means I'm talking about probability. Better than 50-50 chance they will make money. However, what is their goal? Are they willing to risk 10 ticks to make 1 point? You need more than 50-50 or 60% probability. You need 80 or 90% probability. And I do not think it's 80 or 90% certain that they'll make money. I think it's 60% certain that the bears who sell right here will make money. And by making money, probably a point, maybe 2 points. But you need to consider risk and reward, not just probability. Anyway, pretty fascinating day. Let me just move this over here so it's not too prominent. This ended up becoming a measuring gap. Weekly chart, the biggest bull bar. It looks even bigger than this, but maybe about this. But anyway, it's bigger than any bar in all of 2017. So that's 50 bars, which is really impressive to get the biggest bull bar in more than 50 bars. Very late in a bull trend, so very climactic. And it's a parabolic wedge top. First push here or first push here, and then second or third, and then we're working on the final third push, maybe 1, 2, and then 3. Strong enough rally, probably a couple small legs up over the next few weeks. Excuse me. But probably an exhaustion gap. When you get the biggest bull bar late in a bull trend, usually you're going to get a pullback, not a 1 bar pullback, more like a 10 bar pullback. So probably within the next few weeks, we'll start to pull back. Maybe not much, maybe like that, maybe like that. I still think we're going to pull back 5%. Daily chart, a little profit taking at the end of the day, putting a little tail on top of the bar. The January barometer, there are different, okay, here's what I was talking about the bears probably would make money, but is the math worth it? In January barometer, there are different versions of it. Just like at the start of the day, I use the first bar, the first few bars, as a barometer of what to expect for the remainder of the day. Traders use the first day, the first week, the first month of the year to get an idea of what the remainder of the year will be like. You cannot make money trading it. So right now, the first 5 days of January will be up. That increases the chances that the year will be up. But that's not saying much because the market has been in a bull trend since civilization began. We've been increasing the population and increasing the productivity. So the market cap of all the global economy has increased steadily. So most years are up. And because the first several days are already up, that slightly increases the chances that the remainder of the year will be up. But that does not help traders because, how do you make money from that? There'll be moves up, there'll be moves down, there probably will be a 10% correction at some point this year. If you're down below the open of the year, late in the year, you could buy, betting that we probably would close above the open. But other than that, I think there's really no value in paying attention to the January barometer. We had, I'm sorry about my laryngitis. I'm hoping it gets better soon. We've had a remarkable reversal up Monday, Tuesday, Wednesday, and that made it likely that today would also be a bull trend day. But I thought it would not be a trend from the open bull trend the way the past few days were. Second bar, low of the day, first bar, low of the day, first bar, low of the day. But the second bar ended up as the low of the day. We had a big gap up and then a big bear bar. It's possible that it was the high of the day, but I was concerned that the tail on the bottom reduced the chances that it would be the high of the day. We got consecutive bear bars 1 and 2 that reduced the chances of the day being a big bull trend day. Well, it ended up as a big bull trend day anyway. Big gap up and then big down here, big up here. It looks like a trading range open for the first hour or two, which it was. And then we got a weak rally here. So that made the day a bull trend day. But I thought we would end up with a trending trading range day, which it was. And then on bar 59, we ended up with a breakout that led to a measured move up based upon the height of the entire prior 50 bars. Fairly unusual, but pretty dramatic. Stop entry traders, you could sell below 1, taking a chance high of the day, but that tail, one of my concerns, I talked about this, yesterday's a trading range day, increases the chances of early trading range trading today. Trading range, I want to be selling high, buying low, and selling below 1 is high compared to yesterday, but low compared to today. The stop is far away, so the risk is big. If we sold off, we could get big reward, so the risk-reward ratio might not be bad. But chances are, with the trading range yesterday, if we sell off, we'll probably get stuck in yesterday's range. So big risk, the bar is big. You sell below, stop above, and the reward is small, so bad risk-reward. So, and then the probability, what's the probability? Well, with that tail on the bottom and trading range here, it's probably not going to be a big move down. So selling below 1, it has bad risk reward and not very good probability. There's room to the moving average, and you could probably scalp down there. You can look at the open and high of 2. As soon as 1 closed, a lot of traders decided that it was going to test the moving average, which it did. And they just sold at the market, and 2 never got above the 1 open. 2 never got above the 1 close. Those 2 first bear bars made a big bull trend day unlikely. We still got the big bull trend day. Bar 3 reversed up. The bulls were hoping it would be an opening reversal and a low of the day. It was, but because we were big up, big down, big up, the market was confused and we probably had to go sideways for an hour, which we did. The next reasonable stop entry, the first reasonable swing stop entry was buying above 17. We have a triangle. We have a reversal up, and then a second leg down, third leg down. We have lower highs, higher lows, and a decent buy signal bar at the moving average. And this theme of a small double bottom, high 2 at the moving average, repeated several times here. High 2 here, high 2 here. So stop entry bulls above 17. I would not buy above 26 and 28 with 3 bear bars and a 7 bar bear micro channel. But buying above 32, maybe. I said if you took that buy because of the tight bear channel, we might go lower. If you take that buy, it's probably better to put a stop below 17 or 12. At this point, I said there was probably, I don't remember if I said 90% chance. I think I said 90% chance we'd seen the low of the day, but that we could end up as a trading range day and have a deep pullback. 42, 2 legs down, 31 for a doji bar and a tight bear channel. We should test the ledge at the 24 high, the 36 high. And we broke above it here, but did not reverse down very much because we had about a 10 bar bull micro channel with no bear bars. And therefore the reversal down is probably going to be minor, like a bull flag or a trading range. We had a high 258, but we're at the top of an upper trading range in what is so far a trending trading range day. I thought 59 and 60 were surprisingly strong, and therefore I thought a second leg up was likely. 62 might have been the second leg up. And same with 68. 67, another small high 2 buy. 64, 67. Might be an okay scalp, but I think we're going to try to top. And instead, we went into a parabolic rally to the close. We had a bull III 71, 3 consecutive inside bars, closing on its high, but risky. It may be a third push up, 1, 2, and possibly a brief 3. Not a very strong rally here. Then we had an exhaustive buy climax up here. You can call it an exhaustion gap between the 77 close and the 75 high. And you can see the gap close. We fell below the 75 high. You're only trading here if you are a computer. I think the math is terrible for an individual trader. We have big up, big down, big confusion. And that means trading range. And buying with a stop on the final bar, I would not do it. Buy the close, sell the close. The 1 close is sell, certainly for a scalp. 2 close, I would not sell it because we're right above the moving average and yesterday's trading range support. But I think we're always in short. That means sellers above 2. 3, a pretty good bull bar. The bulls want an opening reversal up from the moving average and yesterday's high for an early low of the day, which they got. But because of the big up, big down, big up, we probably were going to go sideways and then either get a good stop entry sell or a good stop entry buy. Buy the close again, maybe 19 or 20 for a few bars. And then here, this is buy the close, but it's similar to this kind of buy the close. When you have buy the close and a lot of small bars, you often get a reversal. Here we get buy the close with small bars. We went up a little bit more. We got a pretty abrupt reversal, but this had the possibility of being like that. And then when you get buy the close and then a big bar relative to what came before, it's climactic, and it's usually the end of the rally for 5 or 10 bars or more, which it was. Buy the close here, big bar, I would not. 59.60, I still thought the odds were, maybe one more leg up here, maybe one more leg up here. So for me, this is not good buy the close. This is buy the close, but you have to be able to make quick decisions because you're buying late in a bull trend and you have small bars like this, and you can get a reversal. Limit order trading. The day started with limit order trading. Buyers below 1, I would not. Sellers above 2, yes. Probably sellers above 3. And buyers below 8, I don't know. That big tail, it's a bad sell. Sell above 10, I would not. Buy above 10, I would not. As the trading range open is too high up. Range here is getting pretty tight. I did not do anything in here. And then 23, probably bears selling the one high. I think at 23, I thought the odds of a bear trend day were small, and therefore bulls will buy below things. But this rally is weak. I would rather buy below a low, like below 28 and near support. I thought we were going to dip below the 8 high. I certainly thought we'd dip below the 1 high. So limit order bears are selling above 1, and limit order bulls are buying around the 1 high or the 8 high. And then below, they're buying the 28 low, the 31 low, the 38 low, looking for 1-point scalps. Up here, we're probably going a little bit higher, so probably buyers below 52, maybe below 55. Will there be sellers above the high? I don't know. This is strong enough up to make me wait, and then this is strong enough up to make me wait as well. Buyers below 62. Well, it's a bull bar, so it's a bad sell signal bar. Decent sell signal bar 63 and never triggered. And that is a warning that the bulls might be stronger than what they appear. And we just rallied into the close. Really dramatic day, really dramatic day. The market is accelerating up in a parabolic buy climax, just racing upward. And when it goes up this strongly, it increases the chances of a surprisingly big reversal down, but there's no top yet. Weekly chart, we may gap up again on Monday. A big bull bar closing on its high like this. Here we gapped up, but this has a lot of momentum, so I suspect that we'll gap up on Monday. But it's also the biggest bull bar late in a bull trend. So I think we'll get a pullback lasting 5 or 10 weeks, starting in the next few weeks. We may get a pause and then one more push up, but probably in the next few weeks, this will end up as an exhaustion move. You can talk about sell at the close on bar 2 and a stop above 1. Also, will you be posting example PowerPoints online anytime soon? On my examples folder file, I have a lot of work to do with that examples file. Right now it has, I don't know how many slides, 800 slides or so. And I've gone through maybe about 80. And I want to go through everything, every slide. And right now I have a lot of information on every slide, and I don't want a lot. What I want to do is, if it's a buy the close slide, I just want to talk about buy the close and not 10 other things on the slide. So if there are 10 other things, I'll put those other things in other locations that just highlight the particular point. So I have a lot of work to do with that. Good question. Some technical analysts think that a prolonged overbought condition is bullish. What do you think about it? Well, there's no question that it's bullish, right? It's a buy climax, and buy climaxes can go a long, long way. Just look at the past year, and then if you've looked at my weekend logs, never in the history of the stock market, the Dow Jones Industrial Average, the S&P 500. Or the E-mini, never has the market had a buy climax this extreme, at least by certain measures. So, for example, here we are 60 weeks without touching the moving average on the weekly chart. We got close here but did not touch. The longest stretch was in 1995 and 1996. It was 62 weeks. It's going to take more than 2 weeks to get here. So this streak will be longer than the longest prior streak. Also, that prior streak topped out at 55 weeks, let's say here, and it took 7 weeks to get down to the moving average. So this is the longest streak without the market beginning to pull back, and when it finally does reach the moving average, it'll be the longest streak ever. The most bars above the moving average without touching the moving average. Monthly chart. We're 14 months. Is it 14 or 15? 4, 8, 12. This is 15 months now with a microchannel, no pullback for 15 bars. That has never happened in the history of the E-mini. Daily chart. It's over 400 days now without a 3% correction. And that has never happened in the history of the stock market. Any stock market, the Dow, the S&P. The Dow is over 100 years old. I think it started in 1893. And the S&P began, I think, in 1923. And when the market started, they were more volatile than they are now. There was less certainty about anything. So the monthly swings were big. It was normal to have a 3 to 5% swing every month when the market began. And over time, the frequency of 3% swings, 5% swings is getting less and less and less as computers get better and better and better at predicting what the market will do. So there's less certainty now that computers are calculating, what the reports will show, what earnings will show, what government announcements will be. However, this is still the most protracted buy climax on the daily, weekly, and monthly charts that the market has ever had. I've been saying for 6 months that the market is probably going to crack 5%, but I've also been saying that every week the market is probably going at least a little bit higher. So buy climax, but no top, and therefore the odds favor at least a little bit higher. And every week it's been going a little bit higher, a little bit higher, a little bit higher, and that's still the case. So yes, the odds are it's going to correct. Of course it's going to correct. But to bet that this week is the start of the correction is a low probability bet. Daily chart, we've had lots and lots of tops over the past year. And I kept saying that every one of the tops is probably not going to be the final top. That chances are every top fails. So while it was likely we were going to get a top, picking that this would be it or this or any of these tops is a low probability bet. Most tops fail. And now we're becoming extremely climactic, and it could go up a long, long way before it will reverse. But I do not think it will, because right now we're beyond what the market has ever done in its history. Certainly in the 100 years or so of the Dow and S&P 500. When you get a parabolic buy climax like this and then it corrects, there's an increased risk of a sharp correction. A lot of times you'll get a blow off top and then a sharp reversal. So let's say it drops 50 points, and then it'll often enter a tight trading range. For a lot of bars, 10 bars, 20 bars, 30 bars. After it gets the tight range, the bulls want resumption up, the bears want a reversal down. But when a channel, this is the weekly chart, when a channel is as tight as this is, even if we drop 10%, 20%, bulls will still buy. The first reversal down is going to be minor. The same with the monthly chart. This is not going to turn into a bear trend. It's not going to crash. Bulls will buy the first reversal down. So not much downside risk over the next many months. Okay, hope everybody has a good week. Really dramatic. Next week looks like we'll probably gap up, but this week is probably an exhaustion week. That means either we reverse next week, or maybe we'll go sideways and then up one more week and then reverse. But we'll probably get a pullback on the weekly chart starting in the next 1 to 3 weeks. Okay, hope everybody has a good weekend.